Monday market recap, where we're touching on the most pressing news you need to know as an investor heading into this week's market. We're going to be talking tech, we're going to be talking Tesla, some of those cure stocks, and on top of that, we have some incredible earnings that's going to be a catalyst to the entire market, not only happening today, but throughout this week. And in the clarity of my transparency, as always, can you guys just hit that like button, or heck, even hit the dislike button? Probably helps the channel either way. But to kick all of this off, just taking a look at the CV numbers going into this week, we're sitting about 60,000 in the US. We're only going to be focusing in the US because Canada, a lot of other places and countries are actually doing better. And because the US drives the markets right now, this is where all the critical moments are going to happen. So let's get into the basic indices really quick. Talking about the S&P 500, only down 1% year to date, driving index fund holders nuts because anybody that is involved in tech right now is making more money than they probably should in the current economic situations. And we can see this actually in the NASDAQ 100, which is up almost 19% year to date here, folks, holding some of those heavier weighted tech stocks. But in our chat group, and probably one of the most popular ETFs amongst the community since this pandemic has taken place, has of course been QQQ, holding a little bit more of those top heavy weighted tech companies, currently up 25.9% or almost 7% higher than the NASDAQ. Now, I do not personally hold ETFs. I'd rather hold the individual components, which is why my portfolio is up so much, especially on this Monday. When I looked at the accounts, I think we were up about $5,000. But that is just my investment style. It does not have to be yours here, folks. Now, getting into some of the catalysts that are going to be happening right now in this very moment, we're talking about Pfizer, guys, because some of the states individually are experiencing much more CV numbers than other places, and this has led to the FDA loosening up basically some of the rules around making cures, and now Pfizer shots get fast-tracked because of this, folks. Now, there's still stipulations and a little speculation around how fast this fast-track approval is going to be because everything is still projected out toward the end of the year or in the first quarter of 2021, where all of us kind of just sit on our hands and wait to see what happens here. At least Pfizer's up a little bit. Looking at the one-day chart, it's only up 4%, and year-to-date, we're actually down massively. I think we're only down like 9%, so definitely underperforming the basic indices. But with a dividend yield of 4.31%, a PE of 12, and just under a $200 billion market cap, this is some pretty good news. Surprisingly that it's not pushing the stock higher, but it could be considered a good value here in my humble opinion. Comparing it to some of the other cure stocks, if we're talking about, say, Moderna or Veritex, these are stocks people have been trading heavily, but every time they've sold out, they haven't been really given an opportunity to jump back in. Kind of interesting that these ones are outperforming against something like a Pfizer, which just has a larger infrastructure overall here, folks. None of this really matters because essentially what's going to happen is one of these companies is going to say, oh, we got the cure first, and we got approval for this, and it's going to skyrocket, and then literally probably within a month or two after that, every other company is going to have their own version of a cure to basically get this out to the public as fast as possible, because there's no way one company is going to take this to scale on a global level at the pace that I think we need required here, folks. But in earnings news, let's get away from the CV talk. We had Pepsi come out today, which was super fascinating because, as I tell you guys, these consumer discretionaries really represent the underlying economy, because we're talking about beverages and snacks that are all related to hotels, food chains, and convenience stores. So it's pretty impressive that Pepsi was up 2% today on earnings. But why was that? Well, let's read through this CNBC article really quick that says Pepsi revenues fell 3% as pandemic hit beverage sales, but boost snack sales. And I can actually be a little bit responsible for their snack sales because I've been going to the convenience store and picking up some of those bags of some of those Smart Pop popcorn. I've also been picking up some like Doritos Lace chips. Just, you know, they're going to be doing fine on the snack sector because no one's got anywhere to go but, you know, Netflix and chill, I should say, folks. But moving on here, let's read some of the highlights that I want to get into. So from the CEO, it's sustainable long-term market share across multiple parts of the value chain that I think is going to make us a stronger company going forward, Lagarde said, which is, again, CEO here, guys. Shares of the company rose less than 1% in morning's trading. We're up a little more than that into the afternoon. Pepsi said it was not providing any outlook for fiscal 2020 at this time, citing the continued volatility and uncertainty surrounding the pandemic. And that's obviously true for Apple, Microsoft, and no company is giving guidance right now because it's just too unpredictable. Earnings per share had $1.32 adjusted versus the analyst expectations of $1.25. So we're already in a good place if we're beating what the analysts were expecting here, folks, with a revenue of $15.95 billion, which I don't want to read through the CNBC article because I actually have the 10Q right here, folks, in which we can see, and maybe I'll zoom in a bit just so you guys can see that a little bit better on the phone. So I'm going to zoom in here, and we can see. So for the second fiscal quarter ending, we had $15.945 billion in revenue, which I know sounds great, but if we take a look at the quarter prior in 2019, it had $16.4 billion. So we can see that it's adjusted about a $500 million loss over the 2019 quarter. But when we're talking about 16, 15 billion dollars here, folks, I mean, it's pretty impressive that they've been able to even keep it up that much. But that loss is definitely related to hotels, restaurants, as I'm sure everybody is well aware of that at this point. Moving forward with Pepsi here, folks, as I told you guys, this is the most critical moment for the entire stock market, as it all hinges on what these earnings are going to look like. And the fact that Pepsi did way better than many of us were expecting, I'm kind of shocked and hoping we see this get represented through many of the other earnings that we're going to take a look at in a second. But let's just talk briefly about Tesla stock. Tesla is up 309%, guys. The EV market is here. It is not going anywhere. And whether you're looking at Nikola, whether you're looking at NIO, it seems like the hype train it's starting to hit its maximum. And everyone that is experiencing FOMO right now is buying at the tops. And I don't know whether that's going to work out in the short term for you or it's not. I'm going to be in Tesla for the long game. I've got about $17,000 sitting in this company right now. And luckily that 17K is made up of none of my own money. As many of you may recall, I pulled out my initial investment. Now, am I regretting selling out those extra 10 shares that I had? Not really, guys, because even sitting where it is right now, I honestly want to sell it because the valuation standpoint is just nutty. But, you know, when it has a $14,000 price target from Cathie Wood, a lot of this FOMO and the fact that the EV market is like the next tech bubble that's going on right now, a lot of companies are going to get fried. A lot of people are going to get screwed, but Tesla's got so much money sitting on $325 billion market cap. There's no dream they can't achieve. And so long as they keep, you know, having execution excellence and we start seeing self-driving continue to evolve, battery technology, we're going to be probably seeing higher highs in the stock. And one of the biggest catalysts that everybody's sitting on right now is basically the optimism around Battery Day, as a lot of people are expecting some form of a million-mile battery or some kind of advancement in the technology to make them the pinnacle of this industry, and probably making all these other auto manufacturers going to probably have to rely on Tesla's battery, which could become a licensing deal. I mean, there's a lot of moments in Tesla that could lead to hundreds of billions in revenue over the next decade. On top of that, they actually released the delivery numbers, which were actually pretty good since this pandemic has started. And this has been, like I said, a really important quarter, because this quarter we've been on full shutdown. You might remember when Elon decided to reopen the factories against the state's advisement and was even willing to take the fine. So, I mean, he's been pushing really hard to make sure that they have a positive earnings this quarter, because another catalyst is them getting on the S&P 500, which they need 4 straight quarters of positive earnings, and something tells me you just don't bet against Elon Musk. And then finally, folks, and most importantly, if you are an individual stock shareholder, you need to be keeping your eyeballs as open as possible in this earnings season. And coming up tomorrow, the most fascinating stocks by far, we've got Delta Airlines. We've also got Wells Fargo. There are a lot of financials reporting throughout this week. On the 15th here, guys, these may be some of the stocks that you're holding. You can just come on to Yahoo Finance and look at their earnings calendar, because we got Goldman Sachs coming up on the Wednesday, along with all these other companies. And a lot of them, again, we got US Bancorp, a lot related to the financial sector, as the financials usually post fairly earlier on. Rather, our tech stocks aren't coming out with earnings till the end of the month or the beginning of August here. Taking a look at Thursday, guys. So not only do we got Netflix coming out on Thursday, we got Domino's Pizza, Omega Flex. There's so many. We got Westco, guys. Like, a lot of fascinating stocks that are really going to dictate what the markets are going to be doing here. Finally, on Friday, what else we got coming out? I'm just scrolling through. Friday actually looks like a pretty boring day for earnings reports. But nonetheless, folks, I would love to know what you think about this market. How is it treating you? Are you one of those people that are just banking a stupid amount of money right now off Amazon or Tesla? Are you just an ETF holder that's kind of undersatisfied with the performance you've been receiving this year? I would love to hear about all of it in that comment section below, as we're all trying to help each other on our own financial independence, retire early journey. I wish I did my portfolio update today rather than doing it on Sunday, because the account is up another $5,000 bloody dollars just today alone. Now, I'm really hoping we see some pullback. There are some individual companies in the REIT sectors that I'm still finding very attractive here, but trying to buy tech at these levels is getting harder and harder. And it's why I consistently remind you guys, you just need to build up a scaled position and then forget about them and move on with your life, because trying to trade them is a joke. Everybody gets out of them. They just go higher. They never get an opportunity to get back in. And those have been the companies that have been driving my portfolio up 40 $100,000 this year, guys. It's almost sickening, really, just considering like earnings aren't that good. There's no expected growth for the next year, and yet the stocks are up 20, 30, 40%. And who knows, maybe some of these tech stocks are growing, but something tells me we're just going to see a bit of a lackluster in performance. So if you're one of those people that is just making a stupid amount of money, like I know people out there that are making hundreds of thousands of dollars right now. I mean, share the wealth. There are people really hurting and struggling. So, you know, if you find a YouTuber, some entertainers you like, never hesitate to throw a little bit of a tip out to somebody that may genuinely need it. But I hope you guys enjoyed this video. Stay cool, stay awesome, and I look forward to catching you tomorrow.